Hey everyone, welcome back. In today's market update, we are diving into major moves across the dollar index, the crude oil, gold, and the Australian dollar. Big headlines, policy shift, and technical setups are all shaping what's next. So let's get into it. Starting off with the dollar index, we saw it hovering in the 103 range after a steep drop earlier this week that took it briefly below 102. That bounce came on the back of Fed's March meeting minutes, where policymakers emphasized the difficult trade off they are now facing, balancing the stubborn inflation against the risk of slowing growth. Now, Trump's surprise 90-day suspension of the most tariffs also gave the market a lift, and that risk on sentiment helped ease some dollar pressure. But technically, the dollar still looks weak. It is a fighting resistance around the 20-day moving average at 103.62, and the RSI is sitting under 40, definitely not in a bullish territory. Zooming out, the index had corrected from a peak of 110 down to 101.27, and unless it convincingly breaks above the 200-day moving average at 104.85, we may see another test of the 102 or even 101.27 support. Next up, WTI crude oil, and it has been a wild ride. After tumbling from a $72 high to as low as 56.43, prices snapped back sharply to trade around 62.7, and that's more than an 8% rebound in one day, triggered by Trump's tariff suspension and a broader market recovery. But fundamentally, it remains a mixed bag. On one hand, tightening global supply is a bullish driver of oil, but on the other, lingering trade tensions and talk of a reciprocal tariff have traders worried about the energy demand and a possible recession. Technically, RSI dipped below 22, which is an oversold territory, and has now rebounded past 34, indicating a potential corrective move higher. Key resistance sits around 63.64 and 65.68. But unless broader sentiment improve or supply shocks emerge, the upside could remain capped. Now onto gold, which surged more than 3% on Wednesday in its best day since October 2023. That move came as the dollar softened and trade tensions flared again, which is a classic condition for gold to shine. The metal is regaining ground after testing the 29.55 support, which aligns with a key neckline from its March breakout and forms a double bottom pattern. Gold has now pushed past 30.55, eyeing a return to the 3100 and 3130 levels, with a potential test of the all-time high at 3167 on the horizon. But there's a twist. While gold benefits from risk-off sentiment and dovish Fed expectations, it is also vulnerable to liquidity crunches. If equities sell off hard, gold could be liquidated to cover losses. So, volatility remains elevated, and the 3000 psychological level is a line to watch closely. Lastly, a quick look at the Australian dollar, which bounced to the 0.615 as risk appetite returned. Again, Trump's tariff pause lifted the stocks and risk-sensitive currencies like the Aussie. However, the broader backdrop remains cloudy. The RBA is leaning dovish with markets pricing in up to 100 basis points in rate cuts this year. That, combined with the Australia economic dependence on China, makes the Aussie highly sensitive to US-China trade headlines. Tensions are still brewing despite the temporary tariff relief. And technically, the pair is trying to recover from a fresh 5-year low of 0.5914, and the RSI remains below 50 but is rising, suggesting room for a short-term rebound. Watch resistance levels at 0.6216 and 0.6270, with stronger sentiment possibly pushing it to retest the psychological 0.63 level. That wraps up today's update. And keep an eye on central bank policies, trade headlines, and also some technical factors. And thank you for tuning in, and I will catch you in the next update.